Hello and welcome to another edition of Property News Update. My very special guest, and I'm delighted that she's joining me, is Margaret Lomas. I'll bring Margaret in just a moment. Before we do, here are the stories that we're covering this week. Don't bank on blind loyalty. Great story here about the bank. Build to rent. Is that the solution? Going to be very interested to hear Margaret's take on this. We're going to also find out where Gen Z like to hang out. We will take you inside America's most expensive property listing. This is jaw-dropping, this one. And fancy living in Canada? We'll tell you how you may just be able to do that. Back in just a moment.
Did you know you can save up to 70% on your staff costs by outsourcing the low-value, repeatable tasks so your team can focus on growing your business? Beepo is an outsourcing provider focused on the real estate industry. With an English-speaking, tertiary qualified and fully trained team in the Philippines, Beepo will give your business the boost it needs to start growing and returning value to you. For more information, visit beepo.com.au.
And as I said at the top of the show, joining me this week is my special co-host, Margaret Lomas from Destiny Financial Solutions, the star of lots of shows on telly as well. It's a delight having you, Margaret. How are you?
I'm very well, and thank you for having me today.
Oh, it's always a pleasure. And look at the background you've got there too. I believe that's Amsterdam. Is that right?
It is Amsterdam, yes, and I haven't been there yet, but it is on my bucket list.
Yeah, well, Carol and I have been there. We actually went on one of those river cruises, and we ended up in Amsterdam. So we actually started in Amsterdam, went through to Budapest, and it was just, it was fantastic. But no, it's a lovely spot. Very nice. Right, I'm looking forward to having a quick chat with you, Margaret. Our first story comes from Mumbrella. Don't bank on blind loyalty. I chose this one because I chose a few special stories because I want to get your take on this. But finance has been one of those things that we've talked a lot about in our shows. I know you have too. But we're talking here about open banking. Tell me about that. How is that going to work, Margaret?
Well, really what this is all about is data more than anything. You would know, Kevin, that if you want to, let's say, change your home loan over, in addition to the fact that you've got to apply to another bank to do so, that bank is then going to want so much information from you, and much of it is information about your present banking relationship with what is going to become your former bank. So they're going to want credit card statements, bank statements, mortgage history, a whole lot of other things that your present bank has on file, but at the moment doesn't have to share. And under this new arrangement at the open bank policy, it simply means that if you want to make those changes, it's going to be much easier for you because the banks will be allowed to share that information.
Do you think it's going to make people a bit concerned about privacy, Margaret? I mean, there's always been a lot of concern about, who gets to see my private information.
Yes, and I agree, and I think people will have that concern. But remember, a policy like this has pretty strict rules around it. So the bank won't just be allowed to share that information because they decide to. There'll be an arrangement whereby you make the request to the bank to be able to share that. And it could be that if you don't want to deal with your current bank, then the new bank will probably end up setting up systems, I'd say, where they get you to sign a document that then allows them and gives them permission to go to your present bank to get that information on your behalf. Yeah. Look, I think it's a great idea because I know that when I want to make some kind of change or do something new in terms of my banking, it's an absolute nightmare having to go and get all of those bank statements together. And for me, I've got a lot of property, as you'd know. Can you imagine how much paperwork is attached to all of that?
Yeah, and of course it is going to make it easier for people to move from banks because, one of the big obstacles is, oh God, I just can't be bothered with all the hoops I've got to go through. Then you've got to talk to the bank that you want to leave anyway. So, yeah, I can see how these things are certainly going to make it easier. So
it's also, there's going to be a benefit, I think, for everybody all around, because if it becomes easier for you to move your banks, then I think your present lender might just be a little bit more interested in keeping you.
Yeah,
If if you let your bank know that you're leaving them to go to another bank, you usually get a call from the bank retention unit, and they sit there and throw all sorts of offers at you that they probably should have been giving you when you were already a customer, and they'll try to retain you. I just think it's going to make that even more possible, that if a bank knows that the capacity for you to leave is so much easier than it used to be before, then they may just get more of a vested interest in keeping you as a client and giving you better deals while you're with them instead of waiting for you to leave.
Very good advice. Hey, quick reminder before I take you to our next story, which is coming from the Courier Mail, that tomorrow Real Estate Talk is out, and we're going to talk about commercial property. The myths, will blow a few of those away. We'll talk about kids and apartments, some of the complexes that could make it a little bit difficult for you, particularly with body corporate. We're going to take a positive look at negative gearing, the top 5 Melbourne growth suburbs, and insurance in disaster areas. Hearing a lot of stories around Australia, Margaret, about insurance premiums, particularly in cyclone-prone areas. So we touch on that story. Interesting because we relate that to what's happened in Christchurch recently and also in Wellington. Wellington's one of the most expensive areas in the world to insure a property because of, things like how unstable it is there. Anyway, we'll touch on that story, one of the many, tomorrow in Real Estate Talk. My special guest host is Margaret Lomas from Destiny Financial Solutions. Margaret, to our next story from the Courier Mail. This is the build-to-rent scheme, and wondering if it's a solution. Build-to-rent is the newest, they're saying, housing format that will have an impact. Your tilt, Margaret. Tell me about build-to-rent. Oh, look at you shaking your head.
You can probably see me shaking my head here.
Yep.
I can't see the difference in this and the National Rental Affordability Scheme, which was an absolute dismal
disaster.
Failure. And the only way that it can be fixed, I guess, or made better in this second iteration is if there are more constraints and rules around how the subsidies from the government are provided. Now, in a nutshell, for the viewers, the way this is meant to work is that builders of large apartment blocks or big developments are offered a financial incentive in the form of a subsidy in order to build properties that will subsequently be rented long term to people like nurses and paramedics and those kinds of skilled workers who are kind of in the middle. They're not necessarily in management positions, they're not in trades, but they are in the middle, and they have, incomes of around $80,000, $90,000 a year, but can't get together enough money for a deposit to buy their own home. So they're offered this rental at a lower rate than they would normally pay. Now, the system or the scheme was a really good idea when it was first introduced as the National Rental Affordability Scheme, and under those circumstances, what was then offered was a tax incentive to developers or big institutions like superannuation funds who are willing to take on these developments of 100 or more properties to then offer them at this cheaper rent. But what ended up happening was that nobody closed those tax loopholes before it was released, and all that happened was developers, and many of them not terribly honest ones. I know you'd be shocked to think that there's dishonest developers, but developers built these properties and on-sold them to investors individually along with those tax credits that they got. So what was happening was that they were building these properties in areas that weren't necessarily very well developed yet. They were new areas. They were offering them to the investors. They'd buy them because the tax incentives seemed wonderful for them. And then once they got into those properties, they found that they had trouble getting tenants because there was an oversupply of properties. The value fell on those properties because of that same oversupply, and it just didn't work out terribly well for them. Now, under this new scheme that the Queensland government initially and other governments are interested in watching how it goes, they're hoping that they avoid this kind of thing. And I hope so too, because if it works the way it should, which is only the developers get this subsidy, then everything will go well. But if developers find a loophole to then offload these developments to investors, then it's just going to become a subsidy to the shonky developer.
Yeah. Yes, one will have to watch very, very carefully, that is for sure. But anything that makes housing more affordable, gives more incentive to people, I think is a good thing. But as you say, and rightly, we've got to be careful of the shonky ones who look for the loopholes, because they spoil it for everyone. It's such a shame.
It is.
I want to take you to the next story, which comes from Property TV, PTV. Click on the link below, get the full story. But this is about Gen Z. Now, we haven't had a lot of stories about Gen Z because, well, basically they're so young.
Yes.
Born 1990 to the 2000s. You can imagine this population, Margaret, very internet savvy. They grew up with social media. They knew nothing other than the mobile phone. So, maybe their requirements as to where they want to live could be just a touch different. I was actually surprised, Margaret, reading this article, just how many Gen Zs there are. They're actually more in numbers than baby boomers.
Well, look, I affectionately call them Gen Zens because they're so laid back about pretty much everything that happens in life. And I think the reason for that is that and I've got 5 in my family. Some of mine are Gen Y and some are Gen Zen. But I think the reason is that information is just so easy to access that they don't need to keep anything in their heads for longer than a minute, because they can always get that information
so
quickly when they need to.
Yeah.
And to me, this has raised a couple of generations of people who, because they can get information so easily and they don't retain anything, they're also quite restless and they like to move around. They like to have their lifestyle. They're very egocentric, and I don't mean they're egotistical. Egocentric is different than egotistical. They're egocentric, which means that they're driven by their inner desires, whereas our generation was raised to think about making the family secure, to the point where people who are baby boomers today almost give up access to their own good lifestyle in retirement in order to see their kids into their own homes. I'm shocked to see how many people actually are getting their kids taken care of and they're not taken care of themselves. But we were taught to think about everyone around us. But our Gen Zs and our Gen Ys were really raised to think more about themselves, and it's not necessarily a bad thing. But what this means is that there are certain things that they look for, where they want to live, that we didn't even think about when we were thinking about where to live.
Yeah, very good points. And it's interesting to read the article about what their requirements are. We're going to take a short break, and after that, Margaret and I will take you inside. Well, this could in fact be the most expensive home in the world, certainly the most expensive home listed currently on the market in the USA. We'll take you inside. You won't believe this place. Back in just a moment.
Your business card is a vital selling tool and a constant visual reminder of who you are, what you do, and more importantly, how you can be contacted. Introducing our new Velvet business cards, featuring a luxurious premium laminate that has a velvet texture and is soft to the touch. Printed on a resilient 450 GSM card, these cards can be printed with a range of spot gloss and foiling options to give your office that prestigious look.
Welcome back to the show. My co-host is Margaret Lomas from Destiny Financial Solutions. Margaret, I don't know about you, but when I saw this story, my jaw hit the ground. This is a cool $75 million more than the most expensive home that's ever been sold in America, and that was Aaron Spelling's house for $120 million. This one's on the market for $195 million. Let's have a look at some of the things you get for $195 million. What about this? What do you reckon, Margaret?
It's a pretty amazing house, isn't it?
Oh,
I mean,
unbelievable.
I sometimes think about properties like this and I just wonder why you need all of this stuff. I mean, you'd never need to leave because you could spend the entire year just getting around the house. I see this as more of a hotel kind of arrangement. So you've got your very own hotel. Every night you could stay into a different room. You could check into a room for a week, see how you go in that room. Next week, check into the next room. I think there's more than 50 rooms in it anyway, isn't there? It certainly looks like it.
Yeah, well, that's right. Well, the car park alone is for 40 cars. There's the wine cellar has 12,000 bottles of wine. I mean, that
I
is
know,
just
it's
amazing.
great, isn't it? My wine cellar's close to that, Kevin.
Oh,
Like
good on you.
72
Yep.
bottles at the
Yep.
moment. So I'm still, I'm still trying to get there at the moment with my wine collection. But look, this house is truly amazing.
Yes.
And I think it's one of those things that we as property investors will look at, will admire, will wonder what kind of people live in it, and then we'll go on with our own lives in our normal 4-bedroom houses and have just a normal life. And sometimes I think that normal life is a little less complicated, don't you?
Absolutely, yeah. So a bit of an insight here. This the owner of this, or the builder, was Jerry Perencio. He was the chairman of Univision, very big in media. It's commonly called the Chartville Estate, and it's in the Platinum Triangle in Los Angeles. But, hidden passageways. It's worthwhile having a look at the video, and we'll take you to the link will take you to the video. You've certainly got to watch it because it is somewhat of a very interesting property, that's for sure, Margaret.
I love those libraries with the little secret rooms.
Yes. And I think on the video, when I watched it too, you're able to click a button in the ballroom and it becomes a theatre. So
Yeah, it's crazy, isn't it?
Oh,
I
yeah,
love
absolutely.
theatre, though.
We're going to take you to our last story. This one comes from Domain. We'll show you a few photographs of this one too. Fancy living in Canada. The reason we've chosen this story is because I want to talk to Margaret about the English mansions. What is it about them, do you think, Margaret, that carries so much mystique? Is it the history? Is it the grandeur? But these are being recreated in Canada.
I think it's because deep in our minds, we all want to be a lord or a lady, don't we? I mean,
okay.
I think in a former life, I was definitely a princess or a queen or something like that. And when I'm
not going to go there, Margaret. I won't go there.
When I envisage that former life, I see myself pulling up at the front entrance via a big circular drive into this massive house. And it's always an English mansion that I'm pulling up to.
Yes.
And, I've got all the liveried servants waiting to open the carriage door, and I get out and sweep in my big hooped dress. You can't do that into an LA mansion, can you? It's got to be an English mansion that you're a lord of, I think.
Indeed.
But I think the interesting thing about this particular story is that it's not just that people are building these mansions, it's that they're choosing Canada to do so. And I can understand that completely. I don't know if you've been into Canada, Kevin, but when you go there, particularly to Vancouver, there's a big sense that you're in Melbourne. Vancouver's very Melbourne-esque, and the lifestyle is very similar to the Australian lifestyle. And the people are wonderful up there in Canada. So what more could you want than the famed English mansion existing in a country that is just beautiful, friendly, and they speak French?
Well, the other interesting thing too, Toronto, I read somewhere, is the third most overvalued housing market. And I didn't say that, someone did. I read it in the article. But there's a few similarities here to Australia, because in Canada, city prices are fairly stable, while in the suburbs they're taking a bit of a hit because of some financing or bank rules. It sounds very familiar to what's happening in Australia.
It is very familiar, and interestingly enough, Canada has a very similar tax system to Australia, particularly in terms of their investors as well. When I rewrote my last book, which was the 20 Must-Ask Questions, I actually did look into the tax systems of England, America, Canada, and to a lesser degree some of the other countries, because I wanted to make that book a book that people could use all over the world. And the one that was most like the Australian tax system for investors was Canada. So every time I think about Canada and look at more of the detail around their economy, their banking system, it does reflect very much our systems here in Australia. And they have recently gone through a very similar property boom in Toronto and Vancouver that Sydney and Melbourne have had. And so it isn't surprising that we see them come off that boom in the same way that we're coming off that boom in Sydney and Melbourne. The other thing about places like Vancouver is Vancouver has a very, very successful urban living project, which began in the 70s, long before anyone else thought of it. And the urban living project was about the very fringes of the city itself, building communities in high-rise and mid-rise and also villa-style accommodation around small hubs that were actually on the very fringe of the city, walking distance back into the CBD. And it's been their most successful project, and it's been going on for years and years and years. And people still want to live in these communities because they have that proximity to the CBD, but it is like living in a suburb.
Yeah. Very, very interesting. Hey, you mentioned there about your book too, which we interviewed you on Real Estate Talk last week, 20 Must Ask Questions. I say again, the original podcast I did with you on that one, probably, I don't know, when you wrote the first iteration of that book, but that's the most downloaded and listened to podcast we've ever produced. It is a fabulous book, and when I spoke to you about it last week in Real Estate Talk, you mentioned that the number of changes that have occurred since you wrote the original one.
Yeah. Look, Kevin, who doesn't want 20 easy ways to find out whether or not the area that you're buying in can stack up? And one of the things I always say about those 20 questions is that they won't guarantee that you buy the best investment you'll ever buy, but they will guarantee that you don't buy the worst investment that you'll ever buy. And that's probably the most we can hope for as investors, since nobody has a crystal ball. But I did find in rewriting it that there were not only a significant amount of changes to tax and the way we claim tax, but there's a lot more data available now than there was when I wrote that first book. Even for me writing that book, when I wrote that first iteration of the book, it was quite a lengthy process for anyone to be able to get the data that they needed to answer the questions. But now that kind of data is very much at their fingertips, and there's more data available. I mean, we have information about livability, we have demand supply scores now. These are things we didn't have before. We have ratings. Microburbs does all of those wonderful ratings on affordability, on livability, on tranquility, on affluence. They do all those scores that really help you get a good picture of an area without you having to live there or be there to get a feel for what it's like. And it does make investing beyond your own borders so much easier than it's ever been. And so the book is 50% bigger than it used to be, with some great new information in it.
Okay, well, the book is called 20 Must Ask Questions. It's written by Margaret Lomas, who has been my guest, and it's always a delight, Margaret, having you in the show. Margaret is from Destiny Financial Solutions and probably one of the most followed property commentators in this part of the world. Margaret, thank you very much for your time. It's great talking to you, and let's see if we can get you across to Amsterdam, huh?
Oh, that'd be great. Thank you.
All right. See you, Margaret. I'm Kevin Turner. I look forward to catching up with you again next time when we do Property News Update. A reminder once again that Real Estate Talk is out tomorrow, and our Auction Update show will be out very shortly, and you'll see them all right here on Property TV. See you next time.